In this state of crisis economics that we're clearly dealing with, you argue, and you say it in the book, we need to make deep and meaningful reforms. You talk about consolidation and centralized reforms. We have a reform bill for the financial system in this country on the Senate floor right now. Does it do what needs to be done? Does it go far enough?
In my view, it goes in the right direction, but doesn't go far enough. In my view, if some institutions are too big to fail, trying to control this problem by imposing larger capital charges on them or having a resolution regime to essentially close them down when insolvent is not going to work in a crisis. We're going to have to bail them out again. That's why I've proposed that if they're too big to fail, we should just break them up. That's a better way of approaching them. Or we should go back to the same kind of restriction that existed under the Glass-Steagall Act of separating commercial banking from investment banking, from prop trading, from private equity, from hedge fund activities. Those things should not occur under the same financial umbrella.
So a beefed up Glass-Steagall of sorts.
Absolutely.
The bankers don't want it, clearly. It's not in the financial reform package.
It's not in the reform package. The banks don't want it. They're even lobbying against even the moderate reforms that are being suggested. There is this proposal for a Volcker rule that will at least don't allow a bank to do prop trading, private equity, and hedge fund. It's like a light version of a Glass-Steagall, but it doesn't go far enough. I would go back to Glass-Steagall.
So let's assume that the reforms that are on the Senate floor right now make it to the president's desk and become law. And that is the new financial system in the United States. Then what happens, Nouriel? Then do we have this creation of a new asset bubble? I mean, you've talked about the cluelessness of how new financial products will act under stress, right? We have all of these complex products. It still exists. We have another stress to the system. Then what happens? Does the reform do any good?
It does some good, but not enough. My concern is that the reforms are not going to be enough. My concern is that now the Fed has zero rates and quantitative easing is going to keep zero rates for a long time. And we have this now build-up of public debt all over advanced economies and the United States. And that combination of weak reforms, of large public debt and deficits, and of very easy money, eventually, not this year, next year, but 2 or 3 years down the line, could be a source of another financial crisis.
Another financial crisis 2 to 3 years down the line. What percentage would you give that in terms of actually happening, Nouriel? I mean, how gloomy are you in terms of the prospects for that?
It depends. You know, some people believe that eventually we're going to do fiscal consolidation in the U.S. by raising taxes and cutting spending. If that were to occur, the risk of another financial crisis like in Europe will be reduced. However, there is a chance that this gridlock in Congress is going to continue. This year is an election year. 2012 is another election year. So there's not going to be any fiscal consolidation in between. If we run $1 trillion deficit this year, next year, the following year, in my view, the chances in the next 3 years the bond market vigilantes are going to wake up in the United States the same way they've woken up in Greece, in Portugal, in Spain, is a high likely probability.
A high probability?
Yes. If we don't do the adjustments.
But do you think the adjustments will be made? I mean, realistically, looking at what we have right now, what's the probability of a double-dip recession 2 to 3 years down the road, a deep one?
It's a risk. Right now it's still a low probability, but I'm mostly worried about this gridlock in Congress. The Democrats are against spending cuts, especially entitlements. The Republicans are totally against any revenue increases. To reduce the deficit, we have to do something in between. Cut spending, raise revenues. This gridlock implies that if we're not going to raise tax or cut spending, the path of least resistance is going to be large deficits and keep on monetizing them the way the Fed had done for the last year when they bought about $1.8 trillion between Treasury bonds, agency RMBSs and agency debt, and eventually that combination of large deficits and printing money will be dangerous for the United States.